Good morning, everybody. Start of a new trading month, December 1st, 2015. Treasuries will trade well up until about December the 20th, 21st. Equities will trade well up till Christmas Eve, about noon, maybe the day before. And then there is some action in the equities between Christmas and New Year's as everybody ramps up for a higher stock market next year. The markets are really pretty interesting today. Stock markets around the globe outside of France are higher because the Chinese manufacturing numbers are so bad, fourth month in a row, that China has to increase its economic stimulus. That spilled over into every market around the globe except for France's. We have also Thursday's anticipated cut in European Central Bank rates of another 10 basis points and increase of at least $10 billion per month in their QE program. So stocks are being bought because of central bank stimulus, and if it's not enough to stop the economic contraction, they're going to do more. And treasuries are headed lower off of the anticipated rate increase on December the 16th of this month, which right now, depending on which futures market you look at, is priced in at about a 70% probability. Okay, we have rolled to the March contracts right now. Everybody should be in March, and that's why we have a gap, and it's usually good for 32 to 34 ticks, and that's where we find ourselves today. Overnight session is definitely a B. It is pointed lower. We've got resistance starting at 12. And we have really best supports down here at the buck, this 125.30 and a half to 126.01. That's where the best support does lie. And you can see that the volume is pretty square down here from 28 all the way up to 126.06. So I believe the market is pointed lower. Volume is below time. That we're going to get maybe go for stops below 126 before we see support. All dependent upon what the stock market does. The inverse relationship continues. Starting out this morning, PMI. PMIs in Europe beat the forecast except for France's. And inflation is low in the European Union, so they can cut interest rates further to stimulate inflation. Hasn't worked very well around the globe these last 8 years. PMI manufacturing 52.6. The focus is ISM at 50, and ISM in the election run-up cycle into 2012 fell guilty to political manipulation. They saw what happened to S&P 500, and they got their act together in a hurry. Construction spending up 0.6%. And the biggest thing that I think the market will look at are motor vehicle sales at 18.1 on an annualized basis. That's a huge number. Even though it is primed by subprime loans of people with less than lower credit than normally would be getting loans. It's being driven by the 72 to 84 month loans that you get on cars right now. The average price of an automobile is just over $34,000 these days, and to accommodate that price, people borrow for 6 to 7 years now. A lot of people do. So, number one focus, ISM. Number two, vehicle sales. I think there's one sell left in the market. Would like to do it 11 to 15. Sell one. Then 19 to 23. Sell two. On the buy side, I think we're going to 126. So we'll put 126.05, 126.01, buy one. And 29 to 25, buy two. Got this high volume number right there. That's the attractor. Okay, the knob spread improved a little overnight from yesterday. And you can see that we also have a B here with volume well below time. This market is in a sell mode, so first support is going to be 13 to 17. That's buy 1. Break that. Think we're headed down maybe to the buck. Then 1 to 5 will be buy 2. On the sell side, we're at 22, so 27 to 31, basically selling into 154 is sell 1. 7 to 11 will be sell 2. And leaning against 154, I think, is the better trade. And to get that, to get a trade off at 31 and still be right that 154 is resistance, you have to do that with a limit sell. The 13 to 17 buys, pretty aggressive. The 1 to 5 is not. Gold held in overnight, didn't get a lot of new selling. Did make it up to 70, I believe, if memory serves me correctly. See our second sell zone, or our sell zone yesterday, well, 67 to 70, then 73 to 75, and 73 basically right there is where resistance is. So we'll keep those numbers. 73, 75, sell 1. 79, 81, sell 2. I think probably the high is in, so last rotates down is 67, so 66, 64 by 1, 60, 62 by 2. So basically 60 to 65 is support, 75 to 80 is resistance. Okay, if the European Central Bank does what they say they're going to do, or hinting heavily at on Thursday, the euro should be selling, but it's not. It's stuck in the low end of its current trading range with a buyer. We haven't even made it below 50 yet, so we've got a buyer 105.75 or lower, buy 1. Buy 2, 550, which we've been trying to do for several days now. Selling 106.20 to 30. And 45 to 55 for sell 2. Crude's holding in pretty well. There were pictures on the news services as this Ergodon is moving his crude oil. They had pictures of, I think, of about 5 large crude carriers, very large crude carrier, or extra large crude carriers. There's a 4-letter acronym that picks those up that I've forgotten. And we have the OPEC meeting this Friday, where they're expected to leave their current quota, 30 million barrels per day, untouched. There is some talk about maintaining quotas and not pumping all you can to maintain market share at any price. So that's where we are right now. 41.50. 41.25, which is where I believe we were last night. And we're at 41, even 41.25 on the buy side, so we'll raise it up a little bit, buy 1. The OPEC meetings tend to freeze the market in a range. And then 42, 42 and a quarter, sell 1. 42.50, 42.75, sell 2. And looking at the E-mini, I think the trading range is going to hold, but there's definitely an upward bias, and 2100 stops above 2100 are still within reach. We do have a seller operating in the 95 area, give or take a little bit, so 90 to 95 is resistance. The news once again, PMI, manufacturing, 52.6, that would be lower than last month's. ISM manufacturing, which is the focus. 50 is, you go below 50, the economy is in contraction. We are having a manufacturing recession right now, but that's not a problem for the United States because our economy is service-based, you know. Construction spending plus 0.6, and really a huge number, 18.1 for vehicle sales. The industry runs really well when it's north of 16 million, so happy times here. But you know, it's you really see, like General Motors right now on certain 15 models, 20% off manufacturers. That eats the first year's depreciation. On pickup trucks, it's 25%. Certain ones, not all of them. And obviously the ones that are loaded, the more goodies you hang up them. My neighbor's got a pickup truck that's all tricked out, a big Chevy. Not even four-wheel drive. 58,000 is what it's stickered for. So you can spend a lot of money on a pickup truck. So the focus, ISM manufacturing and vehicle sales, in my opinion. Okay, 92, 95, sell one. 99 to 02, sell 2. On the buy side, 86, 84, buy 1. Then 81, 79, buy 2. The bias is to the upside. Fail to take out that 2093, 2095 can be a seller. It'll take a bit to get everything up and posted. I'm going to get busy on that. I'll be back with you as soon as possible.